Hey everybody, Chris Englebert with Englebert Financial Advisers with the weekly update. We wanted to talk about something very, some people might find it touchy around this time of year, but we want to talk about how to use your tax return to prepare yourself for 2023. So right now, everybody's pulling out all their information and they're getting it to their CPA. Please tell me that you're using a CPA and they're doing their taxes or having their taxes done. Really what this video is about is once you have your taxes done, what do you do with it? So don't take your tax return when you get it back from the CPA, or if you do it yourself, don't just take it, throw it in a drawer and forget about it. What you want to do is study your tax return and use it to prepare yourself for 2023 and the taxes that you may or may not pay next year in April of 2024. So remember, if you get a large tax refund, this means that you've basically given the US government a tax-free loan for a year. Getting large tax refunds is a bad idea. Some people do it to save money. It is a bad idea. If you want to save money, put some money in an investment account. Don't let the US government have your tax refund for a whole year and then give you your own money back. So the other thing you want to do is look at your tax refund when you get it back. Make sure all of the information is correct. Many times, if you get a direct deposit of a refund to your checking account, make sure that information is correct so it goes into the right account. Also, make sure everything on that tax return is correct as far as your name, social security number, address, etc. I can't tell you how many times I've had people say to me, we haven't heard for anything from the IRS, or we got a letter from the IRS that we didn't file our taxes because some of our information was incorrect and they logged it to the wrong account. The other thing that you want to do is compare this year's tax return to last year's tax return. Now, if you have a professional tax preparer do your taxes for you, many times the first couple of pages, they will actually show you what your taxes were this year and your income, what they were last year, and what they were even 3 years ago. I love seeing that stuff because you can begin to see trends as far as, hey, I'm paying more, I'm paying less, what's going on with my taxes. So that's a very good area for discussion, is look at that sheet that you get provided, or again, pull out your tax returns from the last couple of years and take a look and see what's going on with them. Also, look at when you show dividends and interest. So they have to fill out how much in dividends and interest that you're being paid. Look at the dividends and interest, and are you getting enough dividends that are taxable versus dividends are tax-free? Many people don't understand the difference, and you got to understand, if you're getting tax-free income or tax-free interest, that's obviously tax-free and you don't pay taxes on it. So look at the dividends and interest that you're getting. Now that interest rates are higher, people are beginning to get more interest and dividends paid to them, and so that's going to affect their taxes going forward. Are you doing tax loss harvesting? And what we mean by that, and what we do for our clients here at Englebert Financial Advisors, is that if you have a taxable investment account that's a stock and bond account, we will look at realized capital gains versus unrealized losses. If you have realized gains and you have unrealized losses, you can sell investments to take that loss and offset the gains. You should never just go ahead and pay taxes on realized gains and not offset them. Are you withholding enough for taxes? This is a conversation you need to have, obviously, with your CPA. Take a look at your W-2 and see how much your withholding is. Again, if you're doing too much withholding and you get a big tax refund, that's not good. But if you're not doing enough tax withholding on a pension or on some of your W-2 income, you might want to up it, because what you really don't want to do is file estimated quarterlies. Now, sometimes you can't get away with it and you have to file estimated quarterlies. That's another subject. But again, look at how much tax withholding you're doing and what that means to you. Again, we strongly recommend everybody use a certified public accountant or a CPA. And right now, they're running around with their hair on fire. They're trying to get their tax returns out the door as fast as they possibly can. But set up a time in the summer or in May to talk to them about, hey, what can I be doing different as far as my tax return goes to save me money for taxes for next year? So take a look at that and focus on with your CPA after tax season is done. How are you maximizing your retirement plan? Now, that's a big important thing, because if you're writing a big check to Uncle Sam and you're not maxing your 401k, 457, or 403b plan, obviously one of the simplest things you can do to help save money on taxes is up your contribution level. If you've got a lot of money sitting in a bank savings account or a bank checking account, that just means your money's in the wrong bucket. That means you can afford to put more money in your 401k, 457, and 403b plan, and that's the best way to be able to save taxes. The other thing you can do is, if applicable, put money into an IRA. You have it up until April 15th to be able to put money into an IRA for 2022 taxes. So what I always tell people is that when you're having your tax preparer do your taxes, always ask them, hey, run my taxes if I throw an extra $3,000, $5,000, $7,000, if you're able to, depending upon your age, into an IRA. What's that going to mean for my taxes? And have them tell you, hey, shoot me an email how much I should put in, and put that money, if you can, into an IRA to save yourself money. Because remember, once you pay that money to the IRS, it's gone. If you put the money into an IRA, at least you have it in an IRA. Also, study and ask your CPA whether or not you should be doing more tax-free income versus taxable income. If you're in a higher tax bracket, make sure you're doing tax-free income. Now, the third and final thing that we've talked about, and don't recoil in horror on this, is maybe if you have a lot of income, you should be putting money in addition to your 457, 401k, 403b, money outside of retirement accounts, maybe into a tax-deferred annuity. Because if you put the money into a tax-deferred annuity, you're not going to get a tax deduction, but any gains in the tax-deferred annuity grow literally tax-deferred forever. Unlike a retirement account where you have to take the money out, in a tax-deferred annuity, you do not have to take the money out. There are some very good annuities out there that you can utilize to help maximize your tax savings, and that's another conversation we can have. The other thing you should be doing is talking about what big events you have going on in 2023. Are you buying a house? Are you selling a house? If you're having your taxes done right now and you know you're going to be selling a house and buying a house in 2023, you should be having a conversation right after tax time with your CPA and say, what should I be doing in order to prepare myself best for the sale of a house or buying a house? Are you getting married? What is that going to mean on your taxes? Are you having kids? Obviously, you're going to get a standardized deduction, for each of the children. But one of the things you want to talk about is, what is that going to mean as far as your tax implications for next year? Are you changing jobs or location? If you know you're going to be changing jobs, don't forget and don't leave behind your 401k. But what does that mean? Make sure you enroll in the new company's 401k or 457 or 403b as quickly as possible. Are you retiring? If you know you're going to retire this year, talk to your CPA about some of the changes that you should be making if you're going to be retiring, or if you're going to be retiring next year, there may be some things you want to take advantage of this year to prepare for retirement next year. And finally, are you starting Social Security? I would have a candid conversation if you're still working and you're in your mid-60s as to whether or not you even want to take your Social Security right now. I got an email from one of our clients the other day who was considering taking her Social Security, and she was still working. And I pointed out to her that you've got to understand that Social Security is combined with the rest of your income, and it's taxed at a very regressive rate. So these are all things you should be talking about with both your investment advisor and with your CPA as far as strategies. So once you get your 2023 tax document, don't just throw it in the drawer or file it away. Take a look at it. We always ask our clients, hey, bring them in. We want to see them. We want to see what's going on with you to prepare you for next year. So that's all we have for the Englebert Angle this week. We'll be back soon. Talk to you later.